Welcome to FXcast and our FXcast market analysis videos. This is our video for Wednesday, May 4th, 2011. In each of our videos, we identify high probability trading setups. We look at gold chart to find sentiment. We'll come up with a low volatility watch list, which is updated each hour. An inside bar watch list. We review the economic calendar to see what's going to affect our potential trades, and we have an education spotlight at the end. So let's go to our first trade, which is the Euro Aussie. And they say that a failed setup is a new setup. And what we simply mean by that is that we were trying to trade this to the downside. It didn't work. And so it triggers a trade in the other direction. So we're looking at this consolidating chart. We want to break above that 50 moving average. And then our target's going to be halfway to the 200 and then all the way up to the 200. So let's pull up the charts and take a look. Okay, so here we are with the Euro Aussie, and you can kind of see that this trade is going to be modified a little bit. What we were looking for was a break here. We did get that break for about 20-30 pips, and now it's pulling back here in the new trading session. And so what I would do is raise that target for entry till now 1.6700. 1.6700 with the target of the 200 moving average. So we want to get into this choppiness. And yes, it's choppiness, but once we get in there, I think we can easily run to the 200 moving average. Right now, the bottom of that choppiness is sort of holding up as resistance. So the new entry for the Euro Aussie is 1.3700. 1.3700. What I would do for my stop now, you can go with a tight stop. Once in at 700, you can go a tight stop underneath the 50 moving average here, maybe maybe 65. That's probably what I would do. Or if you wanted to come back down a little bit more to about 60, that's what I would do. 1.3660 is where I would put my stop. And again, our entry now is going to be 1.3700. 1.3. Our second trade is the Euro Franc, and here's another one that has, because of the pullback of today, has come to a support area. And basically we want to watch this. It's approaching support, and we want to watch for a break or be prepared for a bounce and trade it in the other direction. Since we're in a sideways consolidating market, possibly sideways to down, we're looking for the break to the downside, but this one can go either way. So let's pull up the charts and take a look. Okay, so with our second chart, we can look at this one of two ways. We can see that we're pulling into support. Let's draw our support in here. Really, here's the actual support line. Let's try that one more time. There's our support. You can make an argument that that we could raise this up a little bit, but there's the extreme support level. And so we're looking at a couple things. We're looking for a break of this support. There's one entry. We have an aggressive entry simply at the low of today, but again, that's aggressive. And anybody that was watching that Euro US dollar, we talked about some aggressive entries, and they didn't work. So you can talk about an aggressive entry about 1.2755 to run down here to where support is. We're talking about let it come down, and then once it gets down here, trade it either way. Trade it as a break or trade it as the bounce back up to the 20 moving average, because you can see that this is a consolidation area. So there's a little bit more room for it to come down, and then we'll be able to trade this either as a bounce up or as a break to the downside. Our third trade is the Euro dollar. Here's a trade that's again, a failed setup could be a new trade. We've been waiting for this one to pull back. It hasn't pulled back on us. And so now we need to be able to trade this either way, either below the wicks or above the wicks. So we're going to look at this and see which way we think it may go. Again, we're trading this either way, either a continuation of the trend to the upside or a pullback to the 20 moving average. So let's pull up the charts and take a look. We've been talking about this for a couple of days, and we are still waiting for this to pan out. And basically, you can see we now got a nice little rectangle here, a nice little box. And we want to go ahead and trade that one way or the other. So if it breaks to the downside, we're going to trade down to the 20 moving average. If it breaks to the upside, it's going to make a new high. So we're looking to trade the Euro USD either way. Either way, which way is this going to break? Our next trade is the Euro Yen, and on the daily chart, we have a sideways to up trend. We have the ascending wedge, and so we're really looking for it to break either above or below this wedge. We had another one that did resolve itself to the lower, so now we're going to see which way this one's going to go. Let's pull up the charts and take a look. Okay, so here's another one that we've been talking about for a while, looking at trying to trade this multiple ways. First, we're going to go ahead and draw our uptrend line here. Then we have a downtrend line we can draw. So we're looking for this to close out of this box one way or the other. One of our other trades did do this, and it gave a good trade to the downside. So we're just waiting for this to resolve itself one way or the other. You can kind of see the 20 moving average one way or another, even with the wicks, is holding up the support. So we're looking for a break here. So if it breaks below the 20 moving average, we've got to enter to go short, hopefully to run down to the 50. Or if we break above, we can try to retest the swing high. And our final trade is the pound dollar. This is one that we've been looking at, sort of like the Euro USD. We thought they would pull back, and the pound dollar did. So it already had a big move. Now the question is whether or not this is going to come all the way back to the 20 or the 50. So if you miss the move today, then you want to see if you can catch the move down to the 50 if that's where it's going. So we're going to look at this pullback to the support of the 20 and try to get a gauge of whether or not it's going to keep on going to the 50. Let's pull up the charts and take a look. Okay, so our last chart that we're going to look at is the pound dollar. And basically, as we zoom in right here, what we're looking at is, so here was one trade that we were looking at, and that certainly worked out well. And now we're coming into the wicks and the 20 moving average. Sometimes you can see it does go right through that 20 moving average. So we want to be prepared to catch that as it moves down to the 50. So that entry is down here at about 1.6435. That gets us below 20, gets us below these wicks. And then we want to go down here and test, this resistance. And then we want to come all the way down here and test a 50 moving average. So basically, we want to put an alert just below the 20 moving average to catch the trade if the 20 moving does not hold up as support. Okay, as we come to our low volatility watch list, we have two. We're going to watch the pound dollar and the dollar yen. And basically, we're using our low volatility indicator, Bollinger Bands. We're marking the high and low bands. And we're going to trade a break to the upside or the downside. Likewise, on our inside bar watch list, we have the Euro CAD, we got the Euro Pound, and the Euro Franc, and we're marking the high and low of those daily bars, and we're going to trade a break one way or the other. As that consolidation compacts, we should get a push out in one direction or the other. We've got on our economic releases affecting the pound, we've got the nationwide HPMI. We also have construction PMI on the pound. On the dollar, we've got the ADP employment and also ISM non-manufacturing. For New Zealand, we have employment change and unemployment rate. And then for the Aussie, we have building approvals and retail sales. So we do have several important impactful releases that can affect your trades. So we definitely want to pay attention to the times. In our education spotlight, we're talking about the trading committee in your head. And we all know, yesterday we talked about how we can change how we think by talking to ourselves throughout the day. But also, as a trade is approaching, you have that conversation, that trading committee in your head, and if it's a negative one, it's always talking to you about the trades that you've lost or the trades that you missed, and this fear of missing out or fear of the results start happening. And you see, in the book Trade Your Way to Financial Freedom by Dr. Van Tharp, he talked about the Holy Grail, and most people think the Holy Grail are in these external factors like indicators, trading rooms, trading systems. But he says in Trade Your Way to Financial Freedom that it's not about the external factors, but it's about the internal battle between your profits and losses. It's about the results of your trades and not getting too greedy when you're making money and not being too scared when you're losing money. Cut your losses, let your winners run. And being able to properly manage that committee in your head between the results of your trading is how you will change your trading into being a profitable and consistent trader. Thanks, guys, and I'll see you next time.